Key points that nobody tells you when trading options. David Jaffe with BestStockStrategy.com, and in this video, you're going to learn a few really key points that are going to help you improve your trading. So the most important aspect when trading options is to make sure that your sizing is in check so that you don't trade too large and that you're not forced to close out a position for a loss. However, the other aspects that are extremely important is knowing when to trade and when not to trade. And a lot of this is very nuanced. You're going to get better at this the more experience that you gain. Personally, I try to keep things as simple as possible. And what I usually do in order to know when to trade and when not to trade is I look at volatility and I also look at the trading range of the underlying that I'm trading. So as long as the individual stock that I'm looking at is trading at either the low or the high end of its recent trading range, then I will either sell a put or I will sell a call. However, I will also look at volatility. I'll look at both the VIX and the VVIX. I want to make sure that there's not a large spike in VIX and VVIX, because when there are large spikes in VIX and VVIX, that means that there's a large increase in fear and panic in the stock market. As a result, when you sell an option, you are committed to that position. The worst thing that could happen is that shortly after you open up a new position, the trade goes against you and you experience a large volatility expansion event. So by looking at VIX and VVIX, you're able to determine the amount of overall fear and panic in the marketplace. And that will give you some clues to better time your entry points. For example, right now it is September 14th, 2021. And last week, the market sold off a little bit. VIX was trading at about 15, and then it spiked up above 20. But even more importantly than that, you saw a significant weakness in the market where you saw the S&P open up. But as the day progressed, the S&P 500 was unable to hold onto those gains. That's a sign of weakness. So when you combine the price action of the overall market, and then you combine that with the spikes in volatility, where the VIX has increased from about 15 to over 20, which is a 33% increase in over a week, that gives me concern that I want to be much more conservative in choosing puts, and I'm going to be much more aggressive in selling call options on stocks that have appreciated in value. For example, Microsoft is currently trading over 300. So from my perspective, considering that there's elevated VIX, there's more fear and panic in the market, and over the past week, the market has shown a decent amount of weakness, I would then target selling the 335 or the 340 call option. Today, in the trade alerts, UNH was up around $6 or $7 in the morning. We then sold a call option on UNH, which then pulled back as the day progressed, and then we closed out that position just a few hours later for a 40% gain. To recap, the most important aspect when trading, if you want to be consistently profitable, is making sure that your sizing is correct and that you're not trading too large and that you leave enough excess liquidity in your account so that if the trade goes against you, you're not forced to close out the position. The second most important aspect is making sure that you understand both the VIX and VVIX, and you also monitor the overall price action for the market so that if the market is showing you signs of weakness and you still want to sell put options, then you're going to be more selective and more conservative in the underlyings that you choose, and you're also going to sell further out of the money. Additionally, I definitely believe it's more important when we're in a weaker market to be more aggressive and sell more call options, which means that you can scan your watch list. And if an underlying stock is up and it's trading close to its 52-week high, or you think that it's overbought, in that situation, I think it's to your advantage to sell a call option and get some negative delta in your portfolio, especially if you already have some short puts in your portfolio to help offset some of that long bias. David Jaffe with BestStockStrategy.com. Please like, comment, share, and subscribe. Please let me know your thoughts on these tips that I'm sharing with you about better timing your trades and your entries so that you know when to trade and when not to trade. Leave a comment below and let me know your thoughts, and I appreciate your attention.